Welcome back to Dinar Community Channel. They laughed at the Iraqi dinar. They called it a worthless gamble, a fantasy investment doomed to fail. But overnight, Iraq flipped the script, igniting a financial earthquake no one saw coming. The IQD just sent shockwaves through the global economy, and the world wasn't ready. The global financial system was jolted in a way few expected. While much of the world kept its attention on traditional powerhouses like the US dollar, the euro, and China's yuan, a quiet storm had been brewing in the Middle East. That storm just made landfall, and its epicenter is Iraq. The Iraqi dinar IQD, once dismissed by many as an unstable and speculative currency, has suddenly stepped into the spotlight, igniting waves of surprise, speculation, and strategic repositioning across global markets. This is not merely a story of revaluation, it's a story of rebirth. A nation long underestimated just triggered a shockwave that is now reverberating through every level of global finance, from Wall Street to central banks and from sovereign wealth funds to retail investors. The IQD has done what few believed possible, it caught the entire financial world off guard. In recent months, subtle indicators hinted at something significant. But even those tuned into Iraq's political and economic shifts didn't predict the scale and speed of what has now unfolded. For years, the idea of the Iraqi dinar appreciating in value was a topic of debate, often confined to niche financial communities and currency traders holding on to long-shot bets. Yet here we are, in mid-2025, and Iraq has delivered a bold, transformative move that is reshaping its own future while forcing the rest of the world to take notice. The surprise began with a string of announcements from Baghdad. While initially framed as internal monetary reforms, it soon became clear that Iraq was executing a full-scale revaluation of its currency. Government sources confirmed that the Central Bank of Iraq, in coordination with key international institutions, had recalibrated the dinar's exchange rate not just marginally, but dramatically. The new rate, backed by deep reserves, oil contracts, and an increasingly diversified economy, stunned analysts. Overnight, the IQD soared in global value, jumping multiple times its previous pegged range. Markets scrambled to recalibrate. Currency exchange platforms briefly froze as liquidity constraints and demand spikes collided. Banks in the Gulf Cooperation Council (GCC) region and beyond activated contingency protocols as the dinar's surge triggered massive demand from holders who had waited patiently, some for over a decade. Why did this shock happen now? And how did almost every major institution miss it? The answer lies in a convergence of strategy, timing, and geopolitical maneuvering. Iraq, under the leadership of Prime Minister Mohammed Shia al-Sudani and the stewardship of its central bank governor, has spent the past 2 years rebuilding both trust and infrastructure. Often portrayed in the Western media as unstable, Iraq has in fact been quietly stabilizing and modernizing. From digital banking reforms to anti-corruption crackdowns and enhanced oil contract negotiations, Iraq has been reshaping its foundations. Crucially, Iraq had been stockpiling gold and foreign currency reserves while tightening capital controls and preparing its internal systems for a global reintegration. By the time the public noticed, much of the hard work had already been done. The dinar's new value isn't a speculative spike, it's a recalibration that reflects underlying fundamentals many overlooked. Oil played a central role. Iraq, with the fifth largest proven oil reserves in the world, recently negotiated a series of long-term export contracts with several major global powers, including China, India, and Germany. These deals were denominated not in US dollars, but in dinars. That alone sent ripples across financial institutions. It was a bold statement. Iraq wanted its currency not just to be functional domestically, but to matter internationally. What made the shockwave even more potent was the coordinated nature of the announcement. Iraqi officials, in a highly secretive operation, had secured the cooperation of international banks and regulators. The International Monetary Fund (IMF), while not publicly leading the charge, was reportedly involved in consultations. Behind closed doors, Iraq had already laid out its roadmap to re-entry into the global financial arena. But the timing was a masterstroke. The announcement came just after a lull in global FX markets, when most eyes were focused on inflation readings in the US and interest rate debates in Europe. In this moment of distraction, Iraq pounced. And it worked. Within 24 hours of the announcement, the IQD was being traded at significantly higher rates on major international platforms. Forex brokers saw one of the most explosive currency surges in recent history. Speculators who had quietly accumulated positions in the dinar found themselves sitting on gains that, in many cases, eclipsed those seen in even the most bullish cryptocurrency cycles. But this wasn't just about profit. The real shift came from institutional players. Sovereign wealth funds in the Middle East began moving capital into dinar-denominated assets. Multinational corporations reassessed their Iraq strategies, with many now seeking partnerships and joint ventures. Financial hubs in Dubai, Singapore, and London initiated emergency meetings to gauge exposure, risk, and opportunity. The U.S., often regarded as the gatekeeper of global financial movements, was caught in an uncomfortable position. While Iraq has long been under the influence of U.S. foreign policy, this move appeared to be entirely Iraq's own, a sovereign decision executed with minimal Western input. Washington's official response was muted, though Treasury officials admitted they were monitoring the situation closely. Privately, however, there was alarm. For decades, the U.S. dollar has dominated global oil transactions. Iraq's pivot, especially if followed by other oil-producing nations, could threaten that dominance. And with BRICS nations pushing for a multipolar currency order, Iraq's move was not just economic, it was symbolic. The psychological impact of the IQD's rise cannot be overstated. Investors who had long ridiculed the idea of a dinar surge were suddenly forced to reckon with the reality. Social media exploded with stories of small investors seeing life-changing windfalls. Telegram groups, Twitter threads, and financial YouTube channels were flooded with content about the IQD Shockwave. Hashtags like #dinar surge and #Iraq revaluation began trending globally. But amid the frenzy, a deeper shift was unfolding. Iraq's financial credibility had just undergone a radical transformation. Once seen as a fragile post-conflict state, Iraq was now being talked about as a rising monetary force. And this wasn't limited to currency. The Baghdad Stock Exchange experienced record inflows. Iraqi government bonds, once considered junk, were being reevaluated by credit agencies. And perhaps most importantly, Iraq was now positioned as a serious player in the Middle East's economic future. The Central Bank of Iraq issued a statement urging calm, reiterating that the revaluation was a calculated step, not a speculative bubble. They outlined a phased approach to manage liquidity, provide exchange stability, and prevent overheating. Measures were introduced to prevent capital flight and ensure that the surge benefited Iraq's broader economy, not just outside investors. On the ground, Iraqi citizens saw immediate effects. Purchasing power surged. Imported goods became more accessible. Salaries in IQD now had more global value. For a population that had endured decades of war, sanctions, and financial hardship, this was more than just a revaluation, it was vindication. Of course, not everyone celebrated. Critics pointed to the risks of a rapid currency appreciation, especially in an economy still vulnerable to political friction and infrastructural gaps. There were concerns about inflation, overdependence on oil, and whether Iraq could sustain this momentum. But even skeptics agreed on one thing: Iraq had executed a bold move, and the world had no choice but to pay attention. In the days that followed the shockwave, global news outlets scrambled to cover the story they had missed. Financial Times, Bloomberg, and CNBC ran headlines questioning how Iraq managed to blindside the world. Think tanks and economists began publishing white papers dissecting the mechanics of the revaluation. Every financial institution began issuing internal memos analyzing exposure to the IQD and exploring entry points. What happens next remains an open question. Will Iraq maintain its new position, or will geopolitical pressure force a retreat? Will other nations follow suit, revaluing their currencies to reflect new economic alignments? Could this be the first domino in a chain reaction that redraws the global financial map? One thing is certain: the IQD is no longer a punchline, it's a headline. And for Iraq, this marks not just a new chapter, but a new identity. A nation once defined by war and instability has now taken the global stage by force, not with weapons, but with policy, strategy, and vision. The shockwave has only just begun. Like and subscribe for more videos.